What's up there, brother Will? Yeah. Did you hopefully you opened up your accounts for Tastyworks and and got a chance to check out their site. I mean, yeah, I'm definitely I definitely, like I say, appreciate the Tastyworks. It's just, one of those things, I mean, I really, really dig their stuff. They had a guy over there who literally turned he did made like five times his account. He came out with like a couple hundred grand and he turned it into 1.5 million. But he makes like 50,000 trades a year. Basically, he trades every 2 minutes. That's literally, he will trade every 2 minutes. Um, Looking at their markets, we got they're down 30. So I mean, basically, stuff's basically ranging. I mean, it's going to be that way for I think for a little bit. I mean, even ES 34 down, VIX uh, barely up. I mean, it's up 7%. I mean, that's okay change, but it's not like astronomical. Bonds, cost of money. Oops, the cost of money, and yeah, bonds literally flat. And Bitcoin. Why do I go with Bitcoin? Because Bitcoin is speculation. Bitcoin's barely down. It's 91. Bitcoin's just, I mean, everyone still wants to speculate. And then the cost of oil. Why do I look at oil? Just because of what's happening lately in geopolitics. And oil's basically, it's flat. So basically, that's where it is. Our, oh man, we're really getting hit on SCMI. Um, we had gotten $5 of credit so far, and we're only down 50% of that credit. So I'm not totally paranoid, but I just don't like, how far X is. Looks like X is coming in a little bit. But we remember I moved those strikes around. I had moved these strikes. SCMI, I'm going out, and that's out to January, so I'm not freaking. It's still within the realm. It's just our deltas are definitely what's tearing us up. The fact that it's the fact that the volatility and the deltas were still volatility ranked. At least the volatility came down a little bit, but it's just volatility. The upper strike volatility is what's killing us. We're 56 deltas right there on the upper strike, and I keep moving it. I'm not gonna freak out. I'm just kind of like, it's just taking a lot of heat. Definitely taking a lot of heat because it's up $4 today. So I will do what I normally do. I will move this and move this up to the 21 to the 19. SCMI, move that up 19. To get more deltas. That'll give us another extra $68. If we go 19 deltas or 19, let's see if we go here to the 20 strike. No, because it's a 25, so the 20 strike. I mean, this thing is definitely making some moves. I still think that this stock is going to go to zero because yesterday it went up $4 and it went back $2. So the thing is I think we're going to have the same encounter today where it'll just what I call mission creep. It'll just creep up. But I still know that this stock is more than likely destined to go to zero. So if we do this, okay, we're going to try to get some more credit out of it. Let's see what we can get. If we can get a little bit more credit, I got it up here. So if we get credit, cool. But I noticed that yesterday. I mean, it was on a tear yesterday. It went up, and then all of a sudden it fell back $2. So I'm not totally freaked out on it yet. We are creeping up toward our short. I mean, look at that. I mean, we are definitely creeping up toward the short strike. over here. I mean, it's literally on a tear, but not freaked out yet. Okay, that's 21 deltas. I wonder if we, you know what? Let's go ahead and do this. What if we did this? Let's get rid of that. Get rid of that. Cancel that. And let's try it again. We're going to roll the puts up to get more credit. Roll it up to I had the 19. If I roll it to the 20, that gives us 23, which means a 46% chance we could get $1 credit on it. And then we got a 20, 25. Yeah, we're just going to do that. We're going to roll that up. Yeah, let's do that. So we're going to try to get $1.05 credit on this, on that roll, to just kind of even our deltas. We're getting 6 deltas back from this. So, we're just going to sit, wait, don't panic. Although, I mean, it's definitely stressing. When you see that, it definitely could be kind of like, oh, man, But again, we've already got $5 worth of credit on it. $5 worth of credit. And, again, when this thing fell yesterday, I was like, okay, cool. Let it do its thing. Okay, X is coming in volatility a little bit, so I'm not going to freak on that. VIX is just another trade. That's the Trump trade. I'm not going to freak on that. So the only one that's in the wheelhouse of just, doing a major management is at SCMI. Basically, it's just mitigating any losses. Now, I could take this if I have to take it to a strangle. And what a strangle is a strangle is basically, like the straddle, you're selling the out of the money. The strangle, you're selling out of the money. I could put this into a straddle. And here's the beautiful thing. If this thing really gets ridiculous, which it could, I can move these strikes all the way to the straddle. And then I could buy that straddle back and resell it, because normally when you do that, the straddle, you're getting so much credit, you could reset that entire trade, and it gives you a little bit more time to be right. So that's just another thing. Basically, right now, what I'm doing is just mitigating any kind of pain, getting the credit. So let's take a look at the mountain to see where our mountain is at on that, because we're definitely getting close to that upper strike at 26. Our upper strike is 28. So we're definitely taking some heat, taking in a lot of heat on this. I mean, it is what it is. But again, let's do this. Okay, again, we're just moving this up. Did it get filled? I don't think it got filled yet. It didn't get filled yet. Keep moving until, because basically we're trying to move the mountain to the guy. And then once we do that, then we could go ahead and the thing is trying to get as much credit as possible on this. That's the key. Getting credits. And then you'll get enough credit to where you can just reset it, because once you do that, I mean, and again, this trade is out to January. That's another thing. This trade, it still has like over 2 months to do what it has to do. So, I mean, it is what it is. It's definitely taking some heat. X came in a little bit, so we're not in too much pain on that. X came in a little bit, so that one is definitely, again, that's another one where volatility is just ridiculously high. And that, again, that's US still. But again, we're still between the mountain. So I'm not really, I'm not scared on that yet. And that seems to be coming in. Your volatility is kind of coming in on that. So that's cool. So anyways, so let's look at some new trades. The ultimate thing for me is just making sure that I have buying power, and that's the thing. Keep the trade small enough to where you still have enough buying power to do other, to do more stuff. And that's what the whole ballpark, the whole gist of this is trying to keep, trade as much as you can, but trade it small. And that's what I did. Everything is pretty small. A lot of times folks will come in and put 5 and 10 contracts, and it's a lot easier and a lot better if you want to instead of doing 10 contracts, just widen out your strikes. So therefore it's got the same effect, but you're trading small and you're getting, you might have a little bit more risk on it, but you have a lot more return. A lot smaller, you're spending a lot less money to get higher return. And that's what I believe in. It's all quant. It's all basically quant. So hold on for 1 sec. I got this tea. I'm trying to make this tea here. Yeah. So we only have, all right. So now that X looks like X is cooperating a little bit, we'll just kind of see what happens next. Yeah, the main thing is trading small but trading a lot. So therefore, you're keeping your buying power. To me, that's the ultimate thing. EWZ, I have no trade. I did EWZ this year. I do have EEM, which is another that's okay. Where's EEM at? Because that was one that I have a November 15th, and that one I'm gonna see how that. Again, I don't want it to expire. Not November 15th. I think that's December, because I rolled the strikes up on EEM. Yeah, so December 6th. So yeah, because we got some credit on that. We rolled those strikes up and got more credit on EEM. So that one came out okay. The rest, okay, Tilray, that's just a weed play. TLT is a free trade. GDX is still okay. Let's take a look at GDX. That strangle. GDX. Okay, that one is okay. It's getting a little. I mean, the deltas are still neutral on GDX. Let's double check on GDX. No, it's 15 deltas. Okay, so we can, and that's another January. We want to keep it underneath 15 deltas either way. So if GDX starts to move more to the upside, which it is, then we can start looking at moving this lower one in a little bit. Let's see if we were to move it now just to get those deltas neutral, what would happen? And again, this is January, so I'm not really totally scared. Yeah, let's move it. Okay, let's see what we can move it up to. If we move it up to the 34, how much credit we could get on this? 35 cents of credit on this. And what did we sell it for? We sold GDX. Trade price is $1. Yeah, that's 30%. 30% on that. And if we rolled it up to 30%, yeah, let's do it. But I'm going to do it for a couple more. I'm going to see if I can get a little bit more out of it. Yeah. We'll see if we can get between 35 and 45. See if we can get a little bit more money rolling it up there. I'm going to see, because I don't mind doing that. If I can get 30% more of what we sold it for, I don't mind. Because it is in the 15 deltas. I mean, GDX is going up a little bit. Let me see, what else do we have? Any other strangles? We're still doing okay. 43. So we're in the 43 strike right there. We're almost in the on EEM. We're almost right there where the middle of that short strike. We're right there on that short strike, which is cool. I mean, I don't mind that. What's good about it is volatility normally goes up, so that's why we're showing a small profit on it, because volatility normally goes up on that when it falls. So on that short strike, the only thing is that their curves are just so like Tasty doesn't do curves like Thinkorswim, where you could see the expiration profit on a calendarized thing. And I know why is because, you can't really gauge the profit because of the way volatility is. You can't gauge the profit of what the expiration would be. You can't really gauge how much you would be making on that. So, so they don't really cover the expiration, but you would see two mountains on Thinkorswim on EEM, and that's why we're showing like a tiny profit on that. Okay, ARK Invest, that was a butterfly. I don't care about that. Okay, we got GDX, Weed Stock, MSOS. That was nothing. It's like a $6. I think the trade price was like 25 cents on that, so that doesn't matter. Okay, we've got okay, let's see if we can get some credit on this. Okay, since we're not getting $1.05, let's see if we can get a little bit more credit. Yeah, SCMI. Man, I might end up having to close this thing. SCMI, let's see if we can get $3 of credit. Or $1.03 in credit. The only thing is, I just noticed this thing going up and then falling like it did yesterday. Okay, yeah, like it looks like it wants to turn around. So we'll try to get that $3 of credit and see if it'll get back into our wheelhouse. Let's go back to X. Okay, X. I'm not really worried about that. We're only 7 deltas. Again, it's about keeping your deltas neutral. XLF, we're 3 deltas, and that one was that's just a regular what's the name spread. A vertical spread. No, it's a diagonal, so I don't mind about that. Put diagonal. Did I do a put diagonal? Yeah, that's a put diagonal. So I'm not really freaked out on XLF. That we'll just let that do its thing. Let me see, what else do we have outside of that. Let me see if they give me some credit on this. Okay, we'll go back down to $1. So I want to get credit. Give me some credit on this. SCMI is just going ballistic. Yeah, 28%. That is ballistic. Okay. Volatility is coming in a bit, so that should help us out a little bit. It's definitely hitting that short strike. Man, this thing is it's nuts. At 27%. I just want to move this. You know what? Check this out. We're going to move that up to try to get more credit. See where we're at. So we're trying to get the 20 deltas. So I'm going to move it to the 21 strike. Yeah. Okay, we'll do that. See if we can move it to 21 strike and get more credit on that. So we'll move the 17 to the 21 and see if that will help. That's a 22 delta. It gives us $1.30 as this thing is on a tear. So we'll see if we can get $1.31 out of this to get more credits. Again, this is really making our profit zone very small, but that's cool because we still got that 28. But this thing is definitely starting to try to challenge our strikes. Oops, let me see. We're definitely getting to the terror dome. That's why I love this business. I mean, it's challenging. I mean, we're at a 28, and this thing it's at our short. Okay, now we're looking at triangles, so it's at our short strike. We're there, short strike. So let's move it up. Okay, so we're in the money with this. So we're gonna do this. We're gonna make this a straddle because it's definitely roll strikes up. Yeah, this thing is on a tear. 30%. Goodness gracious. I still believe it's going to 0. So we're going to go up. to 22. I'm going to try to get $1.69 a credit. $1.69. See if we could get some credit on that. The only thing, like I said, yesterday it did the same thing and then it just rolled right back. It just went right back to where it was at. So we're going to keep doing this. Try to get that credit. Yeah, I'm telling you, it's definitely going. SCMI is definitely, my Waterloo today. That is definitely my Waterloo. But that's cool. That's cool. So let's look for some new trades, and we'll just let this thing do what it does. 30% in one day. Although it's going to zero. I know it's going to zero. Let me see. Anytime there we go. We got it filled. So we got our credit. We got that credit on there. Okay, GDX, we're moving that up. Okay, so SCMI, let's take a look at where we're at on the mountain. Again, it's just mitigating the pain. So we are at, give me 1 second. Give me 1 second. I'll be right back. Gotta get my tea out here. Yeah. Yeah, the thing is, it's all about mitigating the pain. Get rid of the pain. We are out in January, so at least we've got that in our favor. The fact that this is a January trade. We were in the money for a minute. We're barely in the money. So, it's at that 28 strike. Let's look at our mountain. Yeah, so we're just barely in the money on this. Just barely there. So yeah, I mean it's definitely scary. Now, if this is where the expiry is, we would still be making our money. So the thing is our break even is for expiration. Our break even is literally out to 33. Okay, it's way out there on the $33, like 33.5. Our break even to the downside is way down there at, okay, and GDX just got filled. Our break even to the downside, because we got so much credit, is way down at around 16, like 15. So we're 15 and 34 for our break even. But the thing is it's showing, of course, market losses because, volatility. And I mean, so we do have a long ways to go at expiration. If we held this to expiration, this thing would have to go up to like the 33 strike. But, it definitely is. And it's in the money. We are getting hurt. But, if we were to hold this, I don't want to hold it that long just because of the buying power situation. So basically what it is, we're not out of our break evens yet, where, life is terrible, but I don't want to get out there because I'd have to hold it and I'd be like, double or triple my, my unrealized loss. And again, I said it's unrealized. So it's bouncing back and forth between, in the money. I mean, it could get scary. I'm telling you, this thing is, like I said, this is why I love this biz, because it definitely makes you either young or very old, but I love it. Anyways, let's look at GDX. It got filled. So our GDX trade, Look at the curve on GDX. Let's clear that. Okay, good. So we tightened up our deltas a little bit. Got a little bit of credit, tighten up the deltas. So I'm not going to freak. Our GDX held to expiration 33, or if it goes out, it goes to 33, or it goes to, actually, it goes to 42 or 30, about 33. So now, of course, we got the more credit you get, the more you expand your break even. So that way you could stay in the trade. You'll have to stay in the trade longer. But the thing is if it stays within that range, you keep all the credit. But I normally like to get out at 50%. I do not want to stay in, trades more than that. Everything's about trying to get the credit and get out. Okay, EEM. Let's see what else. TLT, that's free. SCMI was the one we just messed with. Okay, X. Again, let me see. Our deltas were only 8 deltas in X. So I'm not going to freak. Okay, we still getting hurt on our deltas and SCMI, but that kind of helped us out a little bit in terms of readjusting those deltas to expand our break even. So we're still in the wheelhouse there. I'm not totally paranoid where I got to say, let me get out. Not yet. Okay, EWZ. I think this is Brazil or Mexico. Let me see which one this was. This is Brazil. 57. This right there. Okay, we're looking at the only thing that I don't have is enough volume. The king is not there, so it's liquid, but it's not enough option volume for me to take a chance because VIX is still kind of low. VIX went up. Where did VIX go up? Let's go to SPX real quick. VIX is actually so SPX is kind of coming in a little bit. VIX is still kind of low. Yeah, it's still at the 16. So if I wanted to do Brazil, I would have to let's see what we got in terms of liquidity. See if there's any liquidity on Brazil. January 17th. I'm going out there because it's 59 days. The other one's only like 36 days in December, and I don't want to go that close. So if I went out to January on Brazil, see what we got there. 51 out of 314. Nope. It's not enough. There's not enough. Let's see if we did that. Yeah, 65 out of 378. There's not enough. What's the name? There's not enough credit. So we're not going to do that. EWZ. Let's see. EWW, which one is that? I can't remember. It's Mexico. Yeah, that's right. Mexico. So let's take a look at Mexico. Again, there's not enough option volume, only 203 contract. Yeah, so you can tell right here there's no strikes. The granularity of expirations isn't there, and you can tell right here when you see prices like 0.78, point this and that. Clearly, there's no volume, and the granularity of expirations was not there. Let's go to now I don't do USO oil again. 300 some contracts. Chances are you'll see there's no volatility or no volume. They do have the granularity of expirations, which means you got weekly expirations with it. But if I went to the January, look, there's absolutely no volume out there. Let's go to that 16 delta. There's nothing. We go to the expected move delta. Nothing. There's basically like 3 contracts. You can tell by the bid-ask price. It's over 9 cents bid-ask price on a $72 stock, whereas Apple has 1 penny. Okay, so it kind of tells you that there's definitely no. You got 9 cents right here, bid-ask. So there's literally no volume. 239. So that's why you're only getting a tenth the credit of the cost of the trade. So there's nothing there. Let's go to I did XLU once in a while, but look at how low the IV index is. It's upper in the IV rank, but the IV index is low, and that means you're not going to more than likely get enough credit. Go to January. Let's go to see, okay, 20 deltas. Again, no volume. No volume out there. So the king is missing. Damn near 10 cent spread, no volume. So it just tells you 1/10 the price. So clearly you're not going to get enough credit for that. Let's go to let's see what else is next. Okay, FXI. I think no, we don't have a trade in that. I did that earlier. Okay, let's take FXI. All this is kind of okay for a strangle, but let's see. We've got basically everything's there for it. But let me see where FXI has been. Okay, it's kind of ranging a little bit after it fell. It's ranging a little bit. So let's see what we got. Is there in January any volatility? Look again, look at that. 23, 85, 85. There's literally no volume out here. That's why you're seeing these kind of strange looking strikes. And if we went back a week to December, which is 42 days, okay, it's a lot better, but there's still no volume. There's nothing there for us to trade. If I look at that, it's just literally zero. And you're getting 7-cent strikes on a $30, 7 cents between the bid and the ask, 10 cents between the bid and the ask on a $30 stock. That's just way too much. But if we went to the deltas, to like the 20 deltas, let's say 16 deltas, which is inside our expected move, you'd only get 47 cents and $3. So yeah, that's telling you you're just not getting the credit. Okay, IWM, that's still kind of lower on the volatility side. XOP is kind of in the middle. I've traded it before. XOP, go to January, no volume. There's nothing there. Let's go to February and see if there. Just chances are you won't see any, or March you won't see anything out there either. Nothing there. Okay, let's go to see XLE again. It's on the lower volatility, so I wouldn't sell that as a strangle. So that's ETFs. Let's look at liquid stocks. I want to make sure. Oh, let me go ahead and put the filter in. Exclude earnings within a range. I don't want to see earnings in the next 60 days. And I want IB rank to be at least 25 and over. And I want the liquidity to be at least 4 stars. There we go. So 4 stars. So liquidity, no earnings in the next 60 days. Oh, wait a minute. Include earnings. Let's see. Wait. Exclude earnings in the next 60 days. Okay, there we go. So no earnings. High IV. Let's see. We'll go down to 25, 26. Price. Oh, I don't care about that. Okay, so there we go. Now we're looking at liquid symbols. IV rank. Let's just double check. Yeah, okay. IV rank. Oh, look at Pfizer. Pfizer. I wonder. I'll tell you why Pfizer is going through that. Is because of RFK. Yeah, RFK is why Pfizer is literally. If you see that, Pfizer should be getting destroyed. Yeah, look at that. That's the Trump trade right there. Volatility through the roof. It's just getting destroyed, and that is because of RFK Jr. Because he's going, because if he gets confirmed, Pfizer's going to be going through some issues. So grab, I've never done that. So let's take a look at Pfizer and just see what the cost of that is if we were to trade it as a strangle. I wouldn't do that because it looks like the only trajectory for Pfizer is down. Barely any liquidity on the downside. I mean, if we went to the 17 Delta, 19 Delta, 53. Okay, so it's not bad. I mean, it's not, you're not getting a third, but I mean, it's you're getting a quarter of it, of that. But I wouldn't trade this, only because I mean, the strikes. There's not really a lot of strikes for me to play with. If I did this, it would probably be just selling a put if I wanted to do that. Just selling the put, 26 at it. So it's only 1/10. So I wouldn't really. There's nothing there. I would have to move the put up to here, and still yet, okay, you're getting. Nah, it's barely there. So I mean, but just looking at that, I just like the fact that that is definitely a Trump trade. So what else do we have? Let's see. Okay, some of these I've never traded before, and I don't know what their liquidity is. Yeah, Pfizer's getting destroyed. Let me see who else. Hold on for 1 second. Uh, okay, we already got gold then, so we don't need GLD. Volatility's way up on gold because gold has been getting hurt. Um, no, actually, the gold index is down. The GLD index is down, but the IV rank is trading in a higher IV rank. Uh, the GDX is definitely holding under it. That's why he had to change it. Coca-Cola, it's at its upper IV rank, but Coca-Cola's implied volatility is extremely low. It's still kind of low. So, hey KW, good to see you. Hold on for 1 second. Take myself off of mute. Yeah, some of these trades that I have on, we're already up 10%, but that's not enough. Some of those you have to take it to 50% because that was the mission to get in. Coca-Cola, low IV index. So I'm not going to do Coca-Cola. The KRE was one that I wanted to do. KRE is definitely there. That is your regional banking. And the thing about that, though, I think we had the problem with liquidity on that. If we go out to January, KRE, see what we would do as a strangle. If we were to do this as a strangle, okay, see, there's no liquidity. The king is missing. But if we had that, you're only getting 10% of the buying power as a strangle. So that's kind of something I would, you know, I mean, if I did that, I would have to do an iron condor, and I'm kind of not wanting to do iron condors. Well, right now would be an okay scenario. Why do I say that? Because you're right in between their election, and their inauguration. So I don't expect markets to get crazy brutal over the top. You're in 100-point range with their markets. So I wouldn't expect it. Not to say, I mean, I can't expect anything. Anything could happen. Boeing is a lot of contracts in Boeing. Boeing should have a gangload of liquidity. It definitely is screaming um, strangle. See, we've got the 15. Let's see, what is our delta? We'll go to the 20 delta because that's around the expected move. 20 delta, 18 deltas, 453. We're not getting a pure third of it. We're a little less than a third of the credit. But if I did this, I would definitely be looking at this as an iron condor. We're getting almost 1/3 the width of the strikes. 64% probability of profit, 74% that you're going to make 50% on this trade, except we're two deltas long. We're two deltas. Oops. I hate doing that. Okay. I hate doing that. We're two deltas long. Now we're one delta long. So if we were to do this 60%, so we knocked it down about 5% on that. We are getting a third the width of the strikes. No, we're getting half of the strikes just by doing that. So this is one I'm definitely keeping on the docket, which is Boeing Airlines. The only thing is it's been getting crushed. Boeing is just, I mean, for the whole year, it may trade within that range, and that range being from 130 to 165. So 130, which is way down here, to 165, which is way, way up here. It could trade within that range. Boeing has the ability of moving $10. That's, again, we double that, and that'll give us our $10. It does have the ability to trade $10 either way. So if that were to happen, where our mountain is at, if we were to do Boeing using $300 of buying power, so from the 145 to the 135, okay, and that means that we would be down like 27, 28 bucks if it just shot that $10. If it went $10 from the 145 to the 155, we'd be down. Yeah, we'd be down about 10 bucks on that to the upside. If it jumped down all the way to the short strike tomorrow, we'd be down 62. Over here, if it jumped to the short strike, we'd be down 63. Now, if we had to move these strikes, 165 to the 160, again, we have $3 of buying power. If we had to move this and say it went down and we had to move our short strike, we'd have $700 of buying power, and we'd gain about $100 on this. So we'd still be like, we're a third the width of that. So I'm not really scared of that if I had to do that on an iron condor. So I'm gonna keep this in the wheelhouse. I kind of like this, so I might make this trade later. I'm gonna see what markets do, and once they settle down, I'm gonna see what happens. So I don't mind that trade. I don't mind it a bit. Let's go back. So Boeing is definitely one we're looking at in terms of taking that trade. AT&T, no, look at that. You barely, no. Palantir, except Palantir. Let's take a look at Palantir. I don't like that because I don't like the guy who's responsible. But let me just take a look at that trade. I try to stay away from trades that I ideologically don't agree with, because the Palantir guy, he is definitely in the it's not like he's just MAGA. He's MAGA against black folks in a way that I don't like. You got an 85% chance, 70% chance probability of profit. You're only getting though 1/6 of the buying power. So I'm gonna stay away from that. I just wanted to take a look at it. Because remember, every trade that I get in, I automatically know I'm going to adjust. I never get into a trade without knowing that I'm going to adjust it. Okay, let's take a look at these. This is our IV rank. Okay, I've never Franklin Street. I've never traded that. Don't care. Mara. Look at Mara, man. Mara is just ridiculous. That's the Bitcoin stock. And I would never do a strangle on that because, it's just basically it's tracking Bitcoin. Because that can move. It can move like $4 in a heartbeat. And if you were to try to trade, oh wait, that's PLTR. I thought I had Mara. Let me get back to Mara. Bitcoin stock. There we go. This tracks Bitcoin. And the volatility, this thing can move like $3, almost $4 in a heartbeat on you. On an $18 stock, this thing can move $4. It's already moved 4%. So, I mean, that could easily happen. Let's go in just to see if we were to trade this as a strangle. The Bitcoin stock. So let's go to this around the 16, okay, 18 deltas. That's just inside the expected move. Let's go to our 18. See, the deltas on the upside are way, way up here, which means folks think that this thing can fly through the moon. So if we went to the 20 delta up here, so I mean, it's kind of the same thing as SCMI. We're getting almost about a third of the width, which is not terrible. But do I want to tie that up? You have an 83% chance of making 50%, 69% chance of making at least a penny or more. But let's take a look at our mountain. Same problem that we had with SCMI, the one that I'm getting beat up on. You know, that right there. So if where's the break even on this? Oh, you know what? We could look at the break evens over here, and the break evens are 70. No, or 11. Excuse me, I'm looking at the price. Are at 11, about 12. Actually, the break even there is at 12. The break even to the upside is at 40. So 12 and 40 at the break evens. 12 and 40 are the break evens. Right around here. Yeah, so 12 and 40. But we're having the same issue as with SCMI, where that there's so much to the upside that we would be moving our strikes. We just keep moving and moving and moving, and that's what's happening there. So yeah, SCMI came down a little bit. We're not in the money. So again, like I said, it did the same thing yesterday. Went up and then it just collapsed. Okay, let's see what else do we got in terms of deltas. That's the only thing delta wise that's gotten out of control. Everything else is pretty good on our deltas. Is SCMI, that was the only thing that really. Now the MSOS at 17 deltas is because we're long on that one. We took that as a long stock. So of course we're a long position. It's just a vertical spread. It's 94 days out, and I was just thinking that weed might go up because it just got crushed so much. I'm just playing this to say maybe it'll fill that gap a little bit in 94 days. And if it fills that gap, we'll just take the money and run. Yeah, so SCMI did come in quite a bit because we were getting destroyed on that early in the morning. Again, that's just how markets move. So it's back basically where we were at, back, where actually yesterday it came in quite a bit. So of course, that's just the nature of the game. Let's see, let's take a look at it just so you could take a look on a chart. Again, like I said, once you get beat up, you start to go ahead and just find a rhythm and say, okay, what can I do? So we'll see. Again, this thing can move to the moon. Bottom line is it's just managing those deltas to get credit, and we've got enough credit. But actually, there's never really enough credit, but we've got some credit to kind of take the pain off. Again, that's the same thing that was happening on the Mars stock. It's just volatility is just still through the roof on this one. IV rank of 79. It's coming in a little bit, which is cool. That kind of helps when volatility comes in. Let me see something. 5-day change. It went up 3% in the last 5 days of volatility, and that's what really is kind of hurting us. IV rank is 22, so it's coming in. The IV rank is coming in a little bit. Let's see, the IV index is coming in a little. Oh, wait a minute. I'm looking at the wrong one. Let's see. IV index 179, IV rank is coming in a little bit. I mean, it's not like the 200 like it was before SCMI. And let's see what our let's see, 5-day change is what I'm looking for. 5D, so it went up 17% volatility in the last 5 days. So I mean, it's not as ridiculous as it was, but it's definitely volatile. It's definitely painful. But again, this is all about once we get it to a straddle, which is where the put and the call are the same. Then what it is you just buy that back, and then you sell the out because you should be getting a lot of credit for that. Once it's at a straddle, you get a gang load of credit, and then you just reset the trade, and then you're basically resetting it to kind of like center the trade up a little bit. But the whole process is to get credit. So far, we have gotten we're up to $6 of credit of this thing, and that's what it's all about: getting credit. We've got $6 of credit. That's cool. So the only thing I'm looking at today, if I were to take a trade, is Boeing. Everything else is pretty much managed itself. EEM, okay, EEM, let's see. Our trade price is 32. We're at 25, so we've already made an EEM. We've made about, let's see, what's the percentage? Let me see what the percentage of that is real quick. Let me get a calculator in. What is the percentage on EEM? We are, see, 32, 25 is what percent of 32? So 25 divided by 32 equals, so we made about 78% on that one. That's per contract, but that's almost no money. I mean, that's, coffee money. So we're about 78% on that. But, just to give you kind of the idea, now I wouldn't tell you, I would not tell you to go ahead and do those kind of trades, to put like 5 contracts on a diagonal, but it just kind of tells you that was the one that I was looking at. Should this market fall and emerging markets fall with it? Why that, again, is kind of a Trump trade, because they're talking about tariffs. And but the thing is that trade is till December. And if I were to do something, I would roll it. You know what? Let's take a look at rolling that trade, because I rolled it to December already. So let's see, since we're up on some profit, why not just roll it again? Let's do this. Okay, let me just share my screen. Share the screen. And let's see if we were to roll that and try to capture that profit, because we rolled it once. Let's see what happens with the EEM if we were to roll those short strikes again. All right, it's December 20th. What if we rolled those out to December 12th? How much credit can we get? 17 cents of credit? I mean, it's not like the best. You're only getting 17 cents. I mean, it's not like the best of, like, a gangload of cash. That's coffee money. Let me see. What are we getting on EEM? We're making 30 cents a day on Theta. We're only 25 deltas, so we're making 30 cents a day on Theta. Gamma is the only thing that could hurt us. You know what? Let me see what happens. I mean, we're only getting 17 cents. We were to roll this. If we roll it to here, we would be rolling it to an iron condor, which is rolling it exactly. We'd be getting 56 cents of credit. What if we rolled it to an iron condor? But then if we do that, the probability, okay, if we got the 43 put, 43 call, it wouldn't be an iron condor. We wouldn't be able to do that, because this isn't a diagonal. I thought we were in a diagonal trade, so we're not. We're in a calendarized, so we couldn't do that anyways. I thought it was diagonal. So if we rolled the 43.47 to the December, okay, 18 cents. Wow, fun. I mean, it's not like the ultimate trade. If we could get 20 cents, why not? I mean, that's the cost of what, that's like, see, 1920. Let's see if we could get 20 cents in this. If we could get 20 cents, why not? Then we're rolling this out. Basically, we're just moving that calendar. We're picking up, all we're doing is picking up 2 cents of Theta. We do have a higher probability of profit. We're only picking up another 2 cents of Theta, but why not? We're getting another 20 cents of credit. Again, this is all about trying to get credits. Everything's about credits. That's what's kind of, helping take the paint off of SCMI a little bit. That's my Waterloo. At all the trades we have on today, SCMI is the Waterloo. We've been able to tame X. So other than that, I mean, the Boeing trade is the only one I'm looking at possibly making a new trade on Boeing. But other than that, that should be cool. The good thing is we're taking some paint off of some, of ones where we're taking a lot of heat in, and that was GDX and SCMI. GDX we didn't get a lot of heat in, but GDX was in that delta, and we did get enough credit to kind of make up for it. So we're close to our even deltas in GDX. Again, the name of the game is credit. Like I said, and I think I told you when you came out here, Brother Will, every time that I get into a trade, I look at what can I sell. To me, that's more important is what can I sell and not what do I have to buy. And you know what? I'm going to play something for you. This, I played his video a while back. This is, like I say, he's one of my favorite in terms of, let me see if I can find it. In terms of trades, one of my favorite trading organizations. I had just watched one of his videos earlier, or I should say, last night. And, again, just for ideas, it's one of my favorite trading organizations for ideas. I don't puppet trade them. I just listen. And let me see if I could find it. And it had some really good insights. I thought it was in here somewhere. I know I had it. Where would that be? Okay, I may have to just go to their channel and get it. Oh, there it is. There it is. Yes. And let me just play this for you. Okay. Again, between and he deals a lot with volume and open interest to make a lot of trades. Now, I've talked to one of his. I'm a member of this, and I think I gave you the password there, Brother Will, of TheoTrade. I gave you because I don't use that account anymore. I don't use it. So so my thing is like, I want you to at least to see, and even though like the stuff that I had in there is stuff that was like a year old, but still yet it pertains to today. So it's not like, you're not getting the updated version of what they're doing right now. These are classes that I've had that over more than a year, like 4 years ago, but they still pertain. So here you go. This is a really good organization.
Hello, folks. Brandon Chapman with you today. It is a Monday, November 18th, 2024, and we're going to talk today about a golden opportunity in the market. And yes, we're talking about gold. If we look at the performance of the various sectors today in the S&P 500, gold is leading up 1.9%, or GLD specifically. We'll talk about what's going on behind the scenes. One of the things that I track are pulses or things going on behind the scenes that lead to potential movement. And this may be just the beginning in GLD or gold stocks here in the near term. We'll talk about some of those pre-move pulses I'm seeing. And we'll talk about also kind of this pre-move market pulse that led to the last few days of correction. We'll see whether or not we're close to a bottom or it's still time to be a little bit reserved as we're still searching for that low to occur. All right, so let's kick things off. We'll start with this pre-move market pulse. We're going to focus on the S&P 500. As you look at the price action today, the SPX, you'll notice today's high versus Friday's high were lower. The lows are getting higher. This is what's referred to as an inside day. Last week, I talked about the idea that we may be poised for a 5 to 10% correction in the market. This was on Thursday before the market broke. We drew these lines basically outlining where the support and resistance is, and if we break certain levels, we're going to move to the next level. Well, look, we end up finishing below the support on Thursday, and the next level, we had a little vacuum here. The next level is, of course, 585. We could draw levels as we go down. There was a significant print of 580. Down here at 571, we take out 568. We could see a much bigger downside move. A 10% move lower, 10% move lower is 60 points. Could have us back at 540. Right now, we're about 3% of the way from peak to Friday's low, at a close to 3% move down. It still looks like we still have some room to run to the downside. Now, what do we see this that, hey, the downside risks are being priced in? One of the things that I like to look at is the VIX, and not just the VIX, but what we saw, and something I talked about in this video back on a couple Mondays ago before the election was the idea is that the VIX should get crushed, right? This is like an earnings and the VIX should fall dramatically. We talked about 15, maybe a 12 handle on the VIX. But the question we wanted to see was if the market if the market goes up as the VIX declines, what kind of punch are we going to get out of it? And what you saw is the VIX continued to decline going into, let's say, the 13th. The S&P 500, we'll go SPY here. The S&P 500 into the 13th was right there, right? So the last couple of days of VIX selling really did not produce any sort of movement to the upside in the S&P 500. And again, we just started to see the impact of just selling VIX began to come off. And we also saw something else, or I also saw something else. We talked about it, was the idea that, look, as we look at the 3-month volatility against 1-month volatility, what I normally look for is some ratio above 1.2. So I don't care about the candles on here. I'm just looking at the ratio of 3-month to 1-month VIX. Intraday here, we did pop up to about 1.19. What that means is that the 3-month VIX was 19% higher than the 30-day VIX. What this is suggesting that the institutions that are trading the S&P options and other volatility products are suggesting there was a significant potential increase in the VIX coming up in the next several weeks. Well, what that means for the market is that the VIX goes up, the S&P generally goes down. And so we also saw that skew was elevated. So again, elevated means north of 130. We were trading up here close to about 140. So let's bring up a line chart so you can see it. In the last few days, we've actually ticked up. And on Friday, on a selling day, skew went up, which is very unusual. So what we have here is that skew representative of hedging activity. We're seeing very high degrees of hedging. And as the market has kind of pulled back here, hedging activities actually increased. Well, look, if you think the market's going to bounce, shouldn't hedging activity be diminished? No, yes, it should, right? But the idea is that the hedging activity is not diminishing. We'll see what happens with skew today. It's an after hours. It's one data point. We may pop even up higher as the VIX ended up declining. And what normally happens as the VIX goes down, we see hedging activity usually picks up. And so today will be kind of a key point. Friday was a key point. We saw skew went up as hedges were being put on, even as the market was selling. What that suggests is that for the S&P 500, we're not exactly at lows yet. Doesn't mean that we can't find lows here, right? In the near term, we could certainly see a little bit of a bounce up here. Maybe we get up to 59.40. Maybe we just blow out and just take off and do the less likely scenario. Maybe go to 6,200. But as of right now, what we can see is that institutions are guarded, they're hedged, they've increased their hedging even as the market declined at the end of last week. And today we'll see what happens. But it's certainly a point where right now you want to be a little cautious. Now, that doesn't mean you can't be bullish. Doesn't mean you can't find opportunities. I mean, certainly one I talked about last week at the end of the week, and something we saw the previous week developing was uranium plays. It's had a nice day today. CCJ is up 4.3%. We had UEC. We had UUU on Friday. I talked about during my session because of these pre-move pulses that are going on behind the scenes that may help create big movement. And so the idea is that, well, how does this translate to other products? Looking at gold. So gold was one that last week, and what we specifically looked at was some significant trades going on behind the scenes in GDXJ, and that was last Tuesday. So we're kind of down here near lows, and all of a sudden today, we finally see a breakout. Volume was rather significant today, and we may see further upside. Now, let's come back to what we're seeing over here. Gold outperformed every equity sector in the S&P 500. It significantly outperformed the S&P 500 at 0.4%. And so what this is indicative of is the fact that the dollar index is rather extended. It's way the heck up here. You can see the dollar index pull back today. That's because the euro started to gain a little bit of strength against the dollar. We could see a couple or a few days of this, but we also might see, if the market remains relatively weak and underperforming, is that gold may outperform both the dollar and the S&P 500. And so as we look at GLD as a proxy for gold, the idea is that GLD was up 1.9% today. Now, How much do you expect out of this? I mean, if we get kind of a routine bounce, normally you make up about 1/2 to 1/3, 1/3 to 2/3 of the prior decline. What that means is that gold could go to GLD could go to 245, 247, maybe even 250. The strength of the move today in GLD may suggest we may have a chance of getting a bit higher as the dollar is way overbought at this stage. And we're starting to see a little bit of a breakdown today. But here's the deal. The dollar may strengthen against the euro and still weaken against gold, and gold may still outperform the S&P 500. But if gold's up 1.9% today, the dollar was actually down maybe 1.9%. So when you look at the S&P only garnering 0.4% gain, what that means is if the dollar perks up at all, and if the dollar perks up at all, absent the dollar's weakness, the S&P might be down something close to 1.5% today. So there's much more internal weakness going on than is really being observed just by looking at the percentages, only because the dollar had a bad day today. It fell out of bed, and the S&P was only able to garner 0.4%. Gold went up 1.9%.
So anyways, just to give you some, he's one of my favorites. Okay, Brandon over there at Theotrade. You know, just because the analysis, you know, and again, it's all about, you know, everything for me is just kind of I look at everything very objectively. Now, it's not like I follow it, you know, like gold. I just like say, okay, I kind of like your analysis. It's not like the holy grail for me. It's just something, again, more things that, you know, because my filters and the way that I trade never changes. But it's just, you know, something to look at. If you get a chance, Tasty Trade had an interview with the guy. That's the guy I was telling you about. All he trades is zero DTE trades. Okay. Now I'm not a zero DTE trader. I don't do that. There's no way. I'm just, for me, it's just not worth it. You know. But you know, because I'm not. That's not my wheelhouse. Is not, you know, is not trading zero DTE at all. You know, I mean, whatsoever. But the thing is you know, they did a really good interview with the guy that was doing it, and I mean, it really, I mean, it was pretty nice. It was pretty nice, you know. He was going through all the like, again, he had made 5 times his money, and I don't know how long it took him to get there. I think maybe a year or something, but he traded. He made 50,000 trades, and I mean. And I don't know if that's a year. All I know is he says he trades every 2 minutes doing credit spreads. Basically what we're doing here, but he does it only on the SPX. He doesn't use any other stock. Every 2 minutes making a trade and just getting in and out. I mean, that's, you got to have some balls. I mean, even they were talking about, Sosnoff said, man, this is not for the weak of heart. The folks that are weak, and when I say the weak of heart, I mean, you really have to be somebody that likes to bungee jump off of Mount Everest to do that kind of trading. But I mean, again, there's no asymmetrical situation. Trading is basically the more risk, the more return. That's how this business is. You know, the thing is to try to make it less risk so you can make more return. It's kind of like moving, you know, you're on a seesaw and you want to move the fulcrum of the seesaw to one side, you know. That's kind of like what this business is. You know, it's, you know, the more risk you're going to take, you know, you have the higher profitability. But, you know, being, you know, making like, I think it was like he was making like 25,000 trades or something like that in a month or something crazy. That is, I mean, and the risk of doing that is just, I mean, there's no asymmetric risk. You just literally balls out saying, hey, I'm going to just do this every day. You know, I'm throwing caution to the wind. The good thing is that it's for you younger guys, you know, because I'm, you know, of course, folks my age, it's like, no, I can't even think of fathoming the idea of taking that kind of risk. You know, I mean, you know, unless I go ahead and, you know, get a loan, you know, with my, you know, 800 credit score, try to go ahead and get a loan and say, look, give me $1 million. I want to go ahead and I want I want to just. I want to get $1.2 million loan just to trade, you know, every day and make 20,000 trades a day. You know, if I was 20 years old, hey, that's no worry. 800 credit score at $20 at 20 years old, do that. But when you're getting, you know, when you're like 3 times that age and then some. It's like, I don't know. So you younger guys, I say do it. The guys, anybody that's under the age of 50, I say under the age of 45, take a chance. If you're 45 years old, roll the dice. Go out there, make those trades, do what you got to do. Set up that business. But when you get this old, you're like, oh, shoot, I don't know. I'm looking at like, I'm getting to get signed up. They keep sending me these mail and everything else on AARP. I've been getting that for like the last 3 years. I keep getting like, join AARP and join this and that and that. I'm like, man, I don't know if I want to go balls out making 50,000 trades. Who knows? Maybe I'll do that. Just go ahead and get a loan for like and just say, you know what? I'm just gonna I'm gonna do 0 DTE trades every day, and for every 2 minutes, make a trade every 2 minutes, and just throw caution to the wind, saying, okay, I'm gonna make a $20,000 trade today. So what? Yeah, if you're young, do that. Once you get older, it's like, nah, man. I got AARP on my tail. No, there's no way. Anyways. I just wanted to give you guys that heads up. So for today, we mitigated the deltas in SCMI because that was destroying me, which is cool. I mean, it is what it is. SCMI, I'm put a trade in to move the expirations in EEM. We already got 72% on that. If you get 72% on a calendar like this, you do want to move those your short strikes just to get more credit. Because chances are, I mean, you get enough credit. The trade only cost you 32 cents. You already made 25 cents on it. You might as well try to get more credit. Boeing, we put that trade on. GDX, we moved that to make that delta neutral. X, we're sitting on our hands on X because basically the trade that we evened our deltas in that yesterday, and X is not really scaring me delta wise today. Even though the volatility is out there, volatility is hurting. It's it's definitely eating against us. But other than that, I'm not going to freak. The only trade that I had to freak on is because it's in the money, and that was SCMI. Because it went so far in there. But anyways, just kind of give you the heads up. Anyways, Hotep.